Welcome to the Deep Dive. We're plunging into, well, a really essential part of modern business infrastructure today. It often just flies under the radar, but we want to uncover how leading companies don't just find clients, but, how they really build and nurture those critical relationships for the long term. So yeah, today's deep dive is all about the global account management software market. Forget static spreadsheets, really. This is about a dynamic, fast-growing segment of enterprise tech. It's genuinely revolutionizing how businesses interact with, keep, and crucially, grow their client base. Our sources map out a pretty remarkable growth story. We've got current data, projections, forecasts right through to 2033. So as we get started, maybe think about this. What exactly makes this particular slice of software so, well, vibrant and essential right now?
Hmm, that's a great question. What's really foundational, I think, is that this software isn't just a nice to have anymore. It's become a must have. It's massive growth. It's largely fueled by, well, the relentless march of digitization, right? And the absolute need to optimize every bit of the customer experience. Plus, seamless integration with existing CRM systems, customer relationship management systems. That's huge.
Right, CRM being about managing all those customer interactions, and integration means it all talks to each other. Sales, marketing, support.
Exactly. Pulling everything into one single view of the client. It lets businesses be proactive, not just, reacting all the time. It's also really crucial for supporting those subscription models that are popping up everywhere now. Ultimately, this software is the engine, really, for tracking clients properly, for driving revenue directly, and spotting those upsell opportunities.
That frames it perfectly. So our mission today is to look at the global view, then zoom in, region by region. We want to help you really grasp the trajectory, the strategic significance of this market. It's vital stuff if you want to stay informed on key business trends. Okay, let's dive in. All right, let's start big picture, globally. Our sources show that back in 2021, this whole market generated, wow, $13,505.3 million, $13.5 billion. That's already massive. But the real question is, how fast is it actually growing?
Yeah, the projections are quite telling. It's not just growing, it's really accelerating. It's expected to jump to 18,541.8 million by 2025. And then looking further out, hitting a pretty remarkable $34,950 million by 2033.
Wow, nearly $35 billion. That's more than double the 2021 figure.
Exactly. And that works out to a compound annual growth rate, a CAGR of 8.246%. What that sustained demand really signals is that businesses everywhere are getting it. Managing customer relationships isn't just operational, it's strategic for survival, for growth.
And 8.2% CAGR globally.
Yeah,
That's definitely solid, sustained growth, not a fleeting trend, as you said.
definitely not. It's a fundamental shift.
Okay, let's focus in a bit now. North America, a region that usually leads the way in adopting this kind of enterprise software. In 2021, it chipped in a big chunk, 5,321.09 million, so about $5.3 billion.
Right. And North America's story is really one of continued leadership and innovation. Its market is projected to grow significantly, reaching 13,106.2 million by 2033. So over $13 billion. That's a CAGR of 7.803%. Pretty steady growth.
Almost 8%. And that makes sense, given the mature digital infrastructure there, right?
Absolutely. Businesses, they were early adopters, and now they're focused on refining things, maximizing that customer lifetime value. These tools are perfect for that.
And within North America, no surprise, the U.S. is the giant, forecasted to hit over $10.5 billion by 2033 itself. But it's interesting, Canada and Mexico are showing really strong growth too. Canada is predicted to break $1.5 billion by 2033.
Yeah, and Mexico's heading towards $1 billion too. And what's really telling is their growth rates. Canada's CAGR is projected at 8.532%, and Mexico's at 8.004%.
So even faster growth than the U.S. average in the region.
Exactly. It shows this isn't just a U.S. thing. Adoption is deepening across the board as companies look to streamline and compete globally, moving beyond just basic CRM.
Okay, interesting. Let's hop across the Atlantic now. Europe. It generated just under $3 billion, 2,903.64 million back in 2021. Given Europe's diverse economies, maybe different regulations, what's the picture there?
Europe's growth looks, well, structured, consistent. It's also expected to more than double by 2033, reaching 7,094.84 million. That reflects a CAGR of 7.788%, very similar to North America, actually.
Huh, interesting similarity.
Yeah, and a big driver there is the strong focus on data privacy, compliance, GDPR and all that. So companies aren't just investing for efficiency, but also to make sure client interactions are secure, compliant. That's a key factor.
That makes a lot of sense. And looking at specific countries, the UK and Germany really stand out, both projected over $1 billion by 2033.
Yes, with KGRs over 8% too. Germany's slightly higher at 8.5%.
And France is significant too, aiming for nearly $900 million by 2033.
Right. And you also see solid contributions and growth trajectories from Italy, Spain, even Russia showing growth from its 2021 base. It shows this need for integrated tools is widespread across Europe, not just in the biggest economies.
Right, and even the smaller markets add up. You mentioned Sweden, Denmark, Switzerland, Luxembourg, all showing steady CGRs between, 6.4% and 8%?
Exactly. It paints a picture of a whole continent moving towards greater digital maturity in managing client relationships. The rest of Europe combined is also a big piece of that $7 billion projection.
Okay, let's pivot now to Asia Pacific. Our sources flag this as one of the fastest growing markets. It was already significant in 2021 at $3,457.36 million, nearly $3.5 billion. What's fueling that fastest growing label?
Well, APAC is projected to see its market nearly triple from 2021, reaching an incredible $9,890.84 million by 2033. The CJR there is 9.165%. That's notably higher than North America or Europe.
Wow, over 9%. Why such a surge?
It's really about rapid digitization, the sheer scale of emerging businesses, and many companies leapfrogging older tech. They're going straight to cloud-based solutions, SaaS,
Right.
software as a service. It just makes adoption much faster and easier, less upfront investment in infrastructure.
Right, skipping steps almost. And within APAC, China's leading in sheer size, projected near $2.8 billion by 2033.
Yes, China's huge. Its CAGR is also very strong, 9.386%.
Hang on, India's trajectory? That seems to be the real speed story here.
Absolutely. India has the highest projected CAGR in the whole region, maybe even globally in our data set here, at 9.982%, almost 10% annual growth.
Nearly 10%. What's driving that specifically in India?
It's largely the small and medium-sized enterprise sector, the SME sector, rapidly digitizing. Millions of businesses adopting tools to manage growing customer bases, trying to scale up efficiently.
That's fascinating. And it's not just China and India, right? Japan, South Korea, Australia.
Also showing very strong, sustained growth. Japan and South Korea both around 8.5% CAGR. Australia a bit lower at 7.7%, but still solid.
And Singapore. Small country, but often a tech leader.
Singapore's punching above its weight, starting from about $135 million in 2021, projected to hit $400 million by 2033. That's a 9.472% CAGR. Very dynamic.
Then there's Southeast Asia, Vietnam, Indonesia, Thailand.
That's another incredibly dynamic area. Rapid digital transformation there is driving growth from about $270 million in 2021 to over $820 million by 2033. The CAGR for that group is 9.735%.
Incredible momentum across the whole region. Taiwan, the rest of APAC also growing strong.
Yeah, it's a picture of widespread, rapid adoption, really embracing these digital tools.
Okay, let's move to South America. Valued at about $824 million in 2021. What are the trends there?
South America is showing very promising growth as well, projected to more than double, reaching $2,209.54 million by 2033. The CAGR is strong, 8.554%. And Brazil is really leading the charge there.
Brazil's expected to hit over $800 million by 2033.
That's right. A very significant market within the region. It indicates growing digital maturity, a drive for efficiency.
And we're seeing good signs from Argentina, Chile, Peru, Colombia too. TGRs between roughly 8% and 9%.
Yep, pretty healthy growth across the major economies. Our sources suggest it's driven by demand for things like automated billing, better CRM integration, handling subscription renewals smoothly, core functions of this software.
Okay, makes sense. How about the Middle East?
The Middle East is also making a significant digital leap. It started at around $608 million in 2021. It's projected to grow to over $1.6 billion by 2033. That's an 8.459% CAGR.
Driven by national digitization efforts.
Largely, yes, and a general increase in adopting enterprise SaaS, moving business operations to the cloud.
And the leaders there seem to be Saudi Arabia, Turkey, and the UAE, with the UAE showing particularly strong growth.
Correct. UAE's TGR is projected at 9.104%. It reflects those strategic investments in digital infrastructure you see across the Gulf and beyond.
And others like Qatar, Egypt are catching up.
They are. There's a big push to diversify economies, and adopting advanced business software is seen as key to boosting competitiveness.
All right, finally, let's round this out with Africa. Highlighted as having untapped potential. It generated about $392 million in 2021.
Africa's forecast shows steady, significant growth. Expected to cross the billion-dollar mark by 2033, reaching 1,034.87 millionaires. The CAGR is 7.736%. And what's really interesting in Africa is that potential for leapfrogging.
Straight to cloud and mobile.
Exactly, which makes these SaaS account management tools highly accessible, very scalable for businesses there.
And South Africa is the key contributor currently, projected to hit over $430 million by 2033.
Yes, with a solid CAGR of 8.347%.
But Nigeria and the rest of Africa are also showing progressive gains.
They are. It underscores this shift towards more sophisticated, digitally driven ways of managing accounts, even in emerging markets. So, if we pull back and look at the big picture from this deep dive, the theme is unmistakable. This account management software market is riding and frankly driving a global digital transformation wave. There's this universal need for centralized, smart tools. Whether it's the mature demand in North America, APAC's explosive growth, Europe's structured approach, or the emerging infrastructures in South America and Africa, everyone's embracing these tools.
They're becoming essential, really.
Absolutely. Essential for survival, essential for growth in today's business world.
So that brings us to a final thought for you, our listener. We've talked about this rapid, almost universal adoption. Considering how deeply embedded these tools are becoming, what unexpected innovations or maybe even unforeseen challenges might pop up in how businesses manage their client relationships over the next decade? Something to think about. Thank you for joining us on this deep dive today. We hope you continue exploring, connecting the dots, and making sense of the world through information. In the world of business, there's one asset that, well, it absolutely defines success. Your customers. They are, without question, the most valuable part of any company's whole equation.
Absolutely.
So today, we're diving deep into the technology that helps businesses not just manage these crucial relationships, but really maximize them. Account management software.
And our mission for this deep dive, really, is to unearth the key dynamics shaping this vital market. We'll explore the powerful drivers pushing its growth forward,
Okay.
the significant hurdles challenging its adoption, and, the exciting future trends that are truly reshaping how companies engage with their clients.
Right.
Ultimately, you'll see how this software transforms processes, builds deeper loyalty, and critically fuels that all-important recurring revenue.
That's right. So consider this your shortcut, really, to understanding a sector that's both vital and, frankly, increasingly complex.
Yeah, it can be.
We're going to give you specific, practical insights designed to make you well-informed with those aha moments, all without feeling, completely overwhelmed by information overload. Sound good?
Let's do it.
Ready to jump in? Key drivers propelling the account management software market forward. Okay, so to start, it really feels like the demand for account management software has just exploded recently. Is this a new thing, or is it more like a tech evolution of something businesses have always struggled with? What's really fueling this intense demand right now?
It's definitely an evolution, yeah. But what's truly fascinating, I think, is that the first major driver is this escalating demand for customer lifetime value management.
Right, CLV.
Exactly.
Yeah.
In today's incredibly competitive landscape, businesses aren't just chasing that initial sale anymore. They're absolutely prioritizing long-term client engagement.
Makes sense.
And this software is crucial because it consolidates key performance indicators. Things like renewal rates, upsells, customer health scores, churn risks.
All the important stuff.
All the important stuff. But here's a surprising insight, maybe. It's not just collecting these metrics. It's about revealing things like, okay, here's a customer segment that looks healthy on the surface because they're still paying, but who are secretly at high churn risk because maybe their product usage dropped sharply last quarter.
Okay. Something manual tracking would probably miss.
Almost certainly miss it, or at least miss it until it's way too late.
That's powerful. So it's less about just historical data and more about intelligent foresight.
Yeah.
How does that predictive piece actually work?
Precisely. These consolidated insights enable companies to craft proactive engagement strategies. We're talking about transforming what might have been individual sort of one-off transactions into truly lifelong customer journeys. Imagine a system flags a client who's started using a new feature, right? It then prompts an account manager to reach out with, say, advanced tips, rather than just waiting for the annual review.
Proactive, not reactive.
Exactly. And this isn't just for tech companies. We're seeing this benefit a huge range of industries. Tech, healthcare, financial services, telecom, they're all getting on board.
That makes perfect sense.
Yeah.
Especially because In our digital-first world, data flow is just, well, it's everything. I've definitely felt that frustration trying to piece together info from like 6 different systems just to get a full picture of one customer.
Oh, absolutely.
So what's the role of integration here? How big a factor is that?
That brings us straight to our second significant growth factor, the integration of account management systems with CRM, billing, and analytics platforms.
Okay.
The reality is that siloed data just locked away in separate systems is a massive obstacle, both to efficiency and just getting that complete customer view. It's like trying to navigate a city with a dozen different maps that don't actually line up.
Yeah, I remember a time I had to call customer service for a simple billing question. And they had zero idea about my last support chat, even though I'd been a customer for years. That siloed data problem really hits home for the customer, too.
Absolutely. It creates a terrible experience. So when these systems integrate seamlessly, you get this continuous data flow, and that dramatically reduces the manual workload, it eliminates errors, and crucially, it gives you that coveted 360-degree view of every single customer account.
Right.
And this doesn't just boost operational efficiency, it ensures that everyone, account teams, finance departments, customer success managers, they're all working from the same playbook, seeing the exact same up-to-date information.
Everyone's on the same page,
Mhm.
finally. Now, I've definitely noticed a big shift, too, in how companies charge for things. Moving away from those big upfront purchases. How do these newer business models like subscriptions and as a service play into this need for better customer management?
That's a perfect lead-in to our third key driver, the rise of subscription-based and recurring revenue models.
Hmm.
As more and more companies shift to models like software as a service, SaaS or data as a service, DaaS, and other kinds of recurring billing, managing that continuous customer life cycle just becomes incredibly complex.
Right, because you're not just selling a product once anymore.
Exactly. You're selling ongoing value month after month, year after year.
So it's definitely not sell it and forget it. You have to keep them engaged, keep showing value, and basically retain them constantly.
Yeah,
How does the software help with that continuous piece?
precisely. Account management software in this context really acts as a kind of central nervous system for these ongoing relationships.
Okay.
It tracks everything from billing cycles and often quite intricate usage analytics to contract renewals and potential expansion opportunities. This makes sure that customer retention isn't just left to chance or gut feeling.
Right.
Instead, it becomes a data-driven process at every single touchpoint. It lets businesses predict and prevent churn and also spot chances for growth. 2. Critical restraints in the account management software market.
Okay, so the growth drivers sound really strong, incredibly promising. But, we know that even the most exciting sectors have their bumps in the road. What are some of the critical restraints, maybe holding back the account management software market from even wider, faster adoption?
Right. Well, the first critical restraint, and it's often the elephant in the room, really, is the high total cost of ownership.
The cost.
Implementing these really robust account management solutions isn't just about buying the software license itself. It requires a pretty significant upfront investment.
Yeah.
There's the licensing, yes, but also potentially deep integration work with existing systems.
Right.
Comprehensive training for staff, which takes time and money, and sometimes, honestly, a complete re-engineering of existing business processes to actually fit how the new system works.
Oof. Yeah, I could easily imagine for a smaller business that upfront cost, plus just the sheer disruption of changing how they do everything,
Yeah.
that could be a massive barrier, especially if they're still relying on simpler, maybe manual systems.
Absolutely. For small and mid-sized enterprises, SMEs, particularly those still maybe using spreadsheets or some kind of basic manual system, that transition can look financially quite daunting. It's a huge leap from managing clients in a few spreadsheets to investing in a sophisticated integrated platform.
And speaking of daunting,
Yeah.
when you're talking about managing all these customer relationships, you're inherently dealing with incredibly sensitive data, financial data, personal data. How does that security aspect factor into the challenges?
That brings us neatly to the second really pressing concern, the challenge of data security and regulatory compliance.
Yeah, it's huge.
It is. These platforms, they handle sensitive financial details, detailed usage histories, critical client contracts. I mean, really sensitive stuff. That means they absolutely must adhere to strict global standards. Think GDPR in Europe or CCPA in California.
And others.
And many others, depending on the industry and location. It's not just about avoiding fines, although that's part of it. It's about maintaining customer trust.
So it's not just keeping the data safe from hackers, but also navigating this incredibly complex, always changing web of laws and regulations, different rules everywhere. Sounds like these platforms need a good lawyer almost as much as a good engineer.
It can certainly feel that way sometimes. Ensuring really airtight data governance can seriously complicate the implementation process, particularly for firms operating in highly regulated sectors, think healthcare, insurance, banking. The stakes there and the penalties for getting it wrong are just incredibly high.
Okay, so we've covered the tech challenges, the money side, the data security, but what about the people? The human element, the teams who actually have to use these new systems every day, who might be perfectly comfortable with their old ways.
That's our third major hurdle, and it's a big one: change management and user resistance.
Ah, yes, this is how we've always done it problem.
Exactly that. Rolling out a new, comprehensive account management platform almost always disrupts familiar workflows across multiple departments, too: sales, customer support, finance, you name it. It's often a fundamental shift in how people do their day-to-day jobs.
And old habits die hard, right? Especially on busy teams where learning something new feels like one more thing to do. What happens if the adoption rate is low? If people just don't use it properly?
Well, that's the risk. Without really strong internal training programs and clear, consistent leadership championing the change, teams often resist adoption. Or they might just revert to their old methods whenever possible.
Undermining the whole point.
Exactly. And when that happens, it severely limits the expected return on investment because the software just isn't being fully utilized. Plus, it slows down the entire transformation effort, making it really hard to realize the full benefits you were hoping for. It's a classic case of having the best tools but not actually using them effectively. 3. Exciting future trends, reshaping the account management software space.
All right, let's pivot a bit then. Let's talk about what's next, because despite those challenges, this sector is clearly innovating like crazy. So what are some of the most exciting future trends you see reshaping the account management software space right now?
Yeah, this is where it gets really interesting, I think. The first really exciting trend is the integration of AI-driven customer health and retention insights.
Ah, AI, of
Of
course.
course, today's platforms are increasingly coming equipped with really sophisticated predictive analytics, churn risk modeling, and even intelligent upsell or cross-sell suggestions.
So hold on. The software isn't just telling you what has happened in the past, but it's predicting what might happen
Yeah.
and even suggesting what you should do about it. How does the AI actually manage that kind of foresight?
That's really the magic of it. These AI tools, they analyze just vast amounts of customer data usage patterns, support ticket history, communication logs, sentiment analysis, you name it,
Okay.
to identify these really subtle shifts that human teams honestly might easily miss. And this helps teams act preemptively. Well, like reaching out to customers before minor issues escalate into major problems, or identifying new revenue opportunities based on real-time behavior and usage data. Imagine getting an alert that a customer is suddenly interacting way more with a specific advanced feature, suggesting maybe they're ready for an upgrade or additional training.
Proactive again. Very cool. Now, I've also noticed a trend across the whole software world, really, moving away from needing a completely separate, standalone tool for absolutely everything. Is that happening here in account management too?
It absolutely is. That's our second rapid development. The integration of account management features directly within existing CRM suites.
Ah, okay. So embedded within things like Salesforce or HubSpot.
Exactly. Modern systems are embedding functionalities like billing alerts, customer journey tracking, those lifecycle health scores we talked about, right into the popular dashboards teams are already using every day: Salesforce, HubSpot, Zoho, others too.
That sounds incredibly convenient for the account managers themselves. It must dramatically simplify their daily workflow, right?
Right.
Having all that critical info just there in one place.
It really does. This seamless experience, it dramatically improves user adoption because teams are working within an environment they already know and are comfortable with.
Less resistance to change, maybe?
Potentially, yes. It definitely boosts efficiency and ensures that account managers have all the critical customer data right at their fingertips without needing to constantly switch between different applications. It's really about reducing friction and getting to those key insights much faster.
Makes sense. And finally, thinking back to the cost barrier we discussed, how are deployment models evolving to make these powerful solutions more accessible? Maybe to a wider range of businesses, from tiny startups to huge enterprises.
Yeah, that's a great point, and it brings us to our final key trend: the widespread adoption of cloud-based and modular deployment models.
Yeah, basically.
Right. As software as a service, or SaaS, becomes pretty much the absolute norm, vendors are now offering incredibly flexible pricing structures. And, crucially, modular features that can scale up or down seamlessly with the business's growth.
Okay, so modular meaning businesses can maybe start small, just pay for what they need initially,
hmm
and then add more advanced functionality later as they grow or their needs change
hmm
without that massive upfront commitment.
Precisely. These platforms allow for much quicker deployments compared to old on-premise systems. They facilitate smoother remote collaboration, which is obviously crucial now for global or hybrid teams. And they enable much easier API integrations with other essential business tools. So this flexibility, it significantly reduces those barriers to entry we talked about earlier, and it really accelerates what we call time to value.
Time to value, meaning how quickly a business starts seeing actual benefits from their investment.
Exactly. Getting that ROI faster. And that faster time to value applies for both startups just getting off the ground and for large established enterprises that are looking to innovate more quickly. Outro?
Wow, that was genuinely an illuminating exploration. It's crystal clear that regardless of your industry, whether you're in tech, financial services, healthcare, whatever, account management software isn't just some nice-to-have convenience anymore. It really has become a competitive necessity for building those lasting customer relationships.
Absolutely. This deep dive has really explored how businesses are leveraging technology to fundamentally change how they manage customer relationships, shifting towards this model of long-term, data-driven customer journeys. So, as you, our listener, reflect on this, maybe consider, how does this pervasive shift reshape your own perspective on customer interactions? Not just in a business context, but even in your daily life as a consumer. What does it really imply about the future of loyalty, about personalized experience in a world that's increasingly driven by data, and how might that influence your choices, your expectations moving forward? Something to think about.